Hey traders, good afternoon. This is Christian from Hertz Tribeca Trade Group with your market video. So this is a video summarizing all the macro events for the week, as well as technicals, as well as an option review from last week, and what I think are the most interesting option trades from last week. Both repetitive option activity as well as a little bit further out than weekly or front month option signals that I'm looking for. So first things first, just kind of looking at the calendar for the week. What do we have? We've got some more China data. Last week we had some positive information, positive economics that came out of China last week. This week we've got some trade data. We also have the CPI and PPI, so a little bit of a gauge of inflation, which has been interesting. Last couple weeks, there was an uptick in U.S. as well as Eurozone inflation. So we'll see if that's also running the same in China next week. And then over in the U.S., I think the most important is going to be the jobs data that comes out on Friday. They're expecting 190,000 jobs. That comes out on Friday. That's the February jobs report. We also get some final readings on durable goods, capital goods as well, and a couple other data points that are coming out. So to kind of just dive into the technicals, not really much to kind of say that's new here. We've got, on my charts, look at the value areas, which covers price at volume. So we've got new value areas for the month of March. We talked a little bit about that last week. And for S&P, main thing to watch is 237 spot 40. That's your support. We're also still running above the 5-period exponential moving average as we have been for the last couple weeks. We're still a bit overbought here. We're 72 RSI, but you know, the trend is your friend. This is something that we've been saying the last couple of weeks. So watch 237.40. That's the top of value. As long as the price action is above there, you want to stay. You want to stick with the trend. Same thing with Qs. These charts look very similar. The Qs, they're both over 70 RS relative strength index is both overbought still. This got to as high as about I think it was 84.85 at one point. So it's come down a little bit. So we're not as quite as overbought as we were about 2 weeks ago. And same thing, level to watch here is 130.78. That's your bogey. So you can remain long above there if we really start to get into the value area. We know that we're doing some digestion, not there yet. So we can't really, technicals. I know everybody wants to kind of anticipate the next move. Let price be your guide, and until we're into those levels, you can set alerts like I do in my trading system. So if we happen to go below 130.78, I know something is possibly changing. IWM small caps just have not made that next leg up like SPY and Qs. They continue to be still going in the sideways pattern since December, really. We've tried to go a couple times to the upside. 140.13 is the level to watch on the upside, and 136.29. And I'm basically have to stay neutral until I see a break above. We got one small break above on Wednesday, but we didn't close on the highs. I did not initiate a new trade. Still kind of watching there. Same thing with mid caps, which you never really want to ignore the mid caps too, because sometimes they see something going on here too, but they're still kind of caught in the value area just as small caps are. Just to kind of look at a couple commodities before we go on to some sectors. If anybody has a crystal ball here and sees what they think is going to happen here in oil, I do not. All I know is that we've been trading in the sideways range every time we try to get to the high 54s, 55. It's not ready to rally. So we're kind of on the downside of this right now, on the downside of this range. Watch the 200-day moving average. That's 51.75. Until we have a break of the 200-day or a break above, which is 54.56. That's the top of value in crude. Nothing really to do here. You can speculate all you want, but until we break that 55 range or break the 200-day, there's really nothing I see to really do here. XLE, we did see a little bit of a bounce on the 200-day moving average last week, but we really didn't go too far. So XLE, I would watch 73.29 on the upside and 71.49. Also, 71.43, and then also the 200-day moving average. And this is very similar looking. XOP, which is a little bit more aggressive. It's an equally weighted ETF, so the smaller names in the group get the same weighting as the larger energy names. Never really got that much of a bounce. It did bounce on Wednesday, but right back at that 200-day moving average. So sometimes the equities provide the next move before the commodity. Watch that 200-day moving average in XOP. All right, so next, we're just going to talk about kind of go back and forth a little bit. I mentioned next week we have the jobs report. Following that, we have the Fed meeting. That's on the 15th. What are Fed fund futures? I know everybody's talking about this, but I don't think we should ignore it. We're fully pricing in a rate hike in March. So 94%. This 2 weeks ago, it was only about 30 to 35%. What's the takeaway from this? The market is now pricing in a rate hike. So just as we saw Janet Yellen speak on Friday, she mentioned, I think she was less dovish and a little bit more hawkish in terms of those rate hikes, and it really didn't give a jolt to the market because the market is already expecting it. So if the market is fully expecting a rate hike, I don't think and just as I mentioned in the Tribeca Trade Group trading room, I didn't really think that the market was going to move based on her comments because we're already expecting a rate hike. So I don't think it's going to be a shock to the system here. I'm going to talk about financials next. And let's see, I just want to stick to my newsletter here a bit. Oh, one thing to notice before we get into sectors, I wanted to talk about the ACWI index. This is the all world index. It's global equities. Now, the US is a big component of it. It's 52% of this ETF, but you can kind of see that we're back to the highs here, and I think we've got an interesting decision coming up because we're back to the 2012 highs globally. So you could basically watch this level here. It's call it 63 is your bogey. It looks like a 63 and change, but basically 63. That also coincides with the top of value on the March value area. So I think kind of interesting to see what we're going to do here. It's again, it's not just U.S. equities that are moving higher. It's been global equities that have really got a nice move. So I'm going to talk a little bit about Europe in a minute, but I want to talk about U.S. sectors next. So let me just make sure I'm going the right direction. We already did the index review. So sector review. One thing that I noticed a bit, not this is not a huge negative, but most of the sectors, the S&P sectors, these are all the GICS sectors. That is, and you can see their weighting in the S&P. So I have this list or this table based on the highest weights in the S&P, and I always like to look at where we were last week and then look at the noticeable changes. So I have a momentum indicator that is proprietary to Tribeca Trade Group. It's called the Raptor indicator. Notice that a lot of the sectors are starting to show a little bit of falling momentum. Most of them have positive ratings, but the momentum seems to be falling a little bit to the downside. So there are support levels to watch for these. It doesn't mean you should be getting out of equities. It just means that the momentum is kind of fading a little bit that I see. So a couple of sectors which is fine, and these again are the S&P GICS sectors, the major sectors in the S&P. There are a couple areas that we continue to see these rotations, and I think biotech right now is actually an area that is very strong. Last week it outperformed last week, so I'm going to spend a little bit of time talking about the performance. The IBB ETF was up 4.3%. That far outpaced everything else. Also, home builders did pretty well. And then I'm going to talk a little bit about what we saw last week in terms of outperformance in Europe. You could see in the international performers section of our newsletter, you could see that Italy was up 5.7%. Spain was up. France was up. EZU, which is actually all Eurozone, was up 2.8%. So some real nice outperformance there. So before I talk about individual sectors, I just want to talk about what the flows have been. I think CNBC and some of financial media are starting to really wake up to the fact that the buying and the move up in the market is being caused by ETF fund flows. There's just an enormous amount of money that has been going into ETFs. I think it's 54. Sorry, I'll come up with this figure in a second. But I think for financials alone, I've got it down here, is $4.2 billion year to date. So the money keeps pouring in. It's another $9.9 billion in equity ETFs inflows last week, and that's the fourth week in a row where we've had over $5 billion of inflows a week. So really running on a very high pace, I would say. Right now, fixed income ETFs, $2.2 billion inflows. That's exactly in line with what we've been seeing the last couple of weeks. A little bit of outflows into GLD. Also, silver had a little bit of outflows as well last week. Nothing too sizable in terms of commodities. The best, the sectors that saw the biggest inflows last week, again, financials. So I'm going to talk about the XLF chart in just a second. Healthcare, also $422 million of inflows. And then REITs, industrials, materials, consumer staples also saw decent inflows as well. But really, financials and healthcare had some really strong inflows last week. And a lot of the in the financials ETFs, it was mainly the banking ETFs. So I believe I have this up here. Here it is. KRE attracted $259 million of inflows. And KBWB, this is the BKX, the Money Centers Bank Index, $121 million of inflows. So nothing has really changed all year long. This has been the case for financials. They've been leading the way in terms of inflows. And if you go back to since right around the election, that's been exactly the case. Financials have been seeing the most sector inflows of any ETF. So healthcare, mainly what happened last week for healthcare, a couple weeks ago, it was a lot of the XLV, that's the healthcare ETF, seeing inflows. This week, it was the biotech. So IBB had $317 million of inflows. How does this relate to this overall size of the fund? It increased the fund size by about 4%. Same thing with XBI, that's the other biotech ETF, $128 million of inflows, pretty sizable considering the fund size, increasing the fund by about 4.4%. Turning over to international areas, mostly developed markets. It's been emerging markets the last couple weeks, and we've talked about that in previous newsletters and previous videos of the newsletter. It's been emerging markets that have been really hot in terms of money being going there, but not last week. Developed markets, $1.2 billion, and most of that was in the IEFA ETF. That's been pretty strong looking. And it's very similar to EFA or VEA. So you could look at any one of these charts. They have a very similar basket of developed markets, international developed markets that they tracked. And again, don't let that term confuse you. International developed markets is basically just Europe and Japan. There are a couple other regions as well, but the majority of what's in these ETFs is European stocks and Japanese stocks. So taking a look at this ETF, I think it looks, the chart looks really good to me. We're above this price level here, we're above this resistance, and we've been trending higher. And if you go back and you kind of zoom out, you can see that these are not even close to the all-time highs of 63.98. So we've got a long way to go. So if the rest of the world is going to rally, this would be a great way to kind of express it. And you've got your 200-day moving average as your stop, which we're now nicely above. I guess if you want to use a stop here based on this previous resistance, you can also do it here. You could also use the value areas, 56.37. You could stay long above there. Once we start to get into the value area, the trend may be changing, but 56.37 is the level that I'm watching. Let me just go back to the newsletter once again. And other than that, there wasn't very many inflows besides emerging markets and besides the developed market ETFs. Really not a lot of other flows there. I think it was pretty quiet. Russia, Canada, and Mexico also outflows this week. So I want to turn to financials and talk a little bit about sectors. So one thing I mentioned the fact that the market is completely pricing in a March rate hike. So equities, for the most part, seem like they're going to be digesting that once we get that in 2 weeks, if we do get the rate hike. So for the most part, I don't think it's going to be a shock to the world. I think we're fully pricing it in. If Fed fund futures weren't pricing in the possibility of a rate hike, then we would be in a little bit of trouble. But if you look at this on the other side, what happens if they don't raise interest rates? What areas of the market will suffer? I would be a little bit mindful of financials. If we don't get that rate hike in 2 weeks, they could see some downside pressure here. Again, rate hikes are traditionally very good for financials and banks. So if we don't get that rate hike, one area that seems susceptible to a move down would be financials. If we do get it, fine. One thing to notice in the charts is we had a nice gap up. We had this big gap up on Wednesday. Then take a look at the price action on Thursday. So this can sometimes be a reversal bar. It's a little bit too early to call it that yet, but that's a bearish engulfing candle. The price action is fully engulfing Wednesday's price action. If you're a little bit concerned about that, basically just watch the top of value. 2470 is your bogey in the financials ETF. So 2470, put that alert on your charts or in your trading system. If we break below, may be a great place to start taking some profits in financials. So kind of let that price guide help you out in this situation. 2470. So next, biotech, which I think is getting more and more constructive. This is something that we've been all over the last couple of weeks. I do have a long swing trade on in XBI. I put in place about I think the beginning of last week. So you know, this is starting to break out. Since the move above the 200-day moving average, we also have this dotted line. This is the IBB ETF. So in this ETF, the larger biotech companies have a bigger weight in the ETF versus XBI, where everything is equally weighted, the small versus the large. But once you kind of dig into the individual names, you could see that it looks like there's a lot of opportunities to trade these names versus the 200-day moving average. So I started to look at what names are showing upside momentum. That's in the light blue, and then taking a look at that and kind of doing a little bit of a examination. With this was a name that we saw was upgraded on Friday. Biogen. Take a look at what Biogen. It's right above the 200-day moving average. I like a long here as long as it stays above that 200-day moving average line. Same thing in VRTX, also just barely above the 200-day moving average. This is Vertex Pharmaceuticals, so similar looking chart. Celgene has already made a nice little move here, and I'm watching this trend line for continuation above there. You could see these big purple lines up here as well. What are they? They're Virgin Point of Controls, VPOCs. That could be where we might be getting to here in Celgene, as long as we get above this line first. So that's kind of what I'm watching for in Celgene. Another chart that caught my eye is BioMarin. Also nicely just barely above the 200-day moving average. So again, the theme of this biotech examination is using the 200-day moving average. You can try longs here, and then keep your stops right at that white line, that 200-day moving average. So that's the review of biotech. While I said, I think a lot of the other sectors may be losing a little bit of momentum to the upside. There's always places in this market that are doing things differently, that are trending a little bit differently than the rest of the group. And right now, I see it's biotech. I mentioned a few minutes ago that Europe had the best outperformance in terms of country and region specific ETFs last week. So taking a look at these charts, I think these charts are very interesting, very notable, attractive here. And if you've got your defined support here, 3567, I like EZU to the upside. That's the Eurozone ETF. This group did not see a lot of inflows last week, but still, I think the charts are looking constructive. EWG, the Germany ETF, did see a little bit of inflows. This has kind of been, I would say, the leader in the group, and it's starting to break out here above this recent price congestion here. So Germany, I think, is constructive. Take a look at what France is doing. France also just moved above this sideways range and above the 200-day moving average. Looking pretty good as well. Spain, take a look at the EWP ETF. Also looking strong as well. A move starting to get a little bit above that 200-day moving average, and the same thing, this little sideways congestion, now starting to move above. Also Belgium, EWK. This is also breaking above the 200-day moving average. Of the charts that I mentioned, I like Spain, I like EWQ and Germany. And if you want to play the whole group, couple of ETFs that you could do this. EZU and FEZ, FEZ is also the Eurostox ETF, so you could do that and through a couple different means. Just to kind of go over, so that is the kind of the macro view. Two areas that I like. One which saw and both saw really nice outperformance last week was Europe. The other in the U.S. was biotech. So I think you want to stick with that trends. I think they could just be starting, and we've got those defined support, which defined support levels that I've mentioned. Now to just kind of do a single stock review of option activity that we saw last week. I'll bring up my activity blotter from last week, starting with 220, starting with the beginning of the week. There was a couple things that caught my eye last week, and I'm not going to go into each one of these. But FCX was one trade that we saw. This is kind of a stock that's been moving down lately, but we saw a nice January play in this one. I think it's been a little bit oversold, but if you want to take a shot, I talked about this here. Unfortunately, it didn't go too far. This was Wednesday, then Thursday and Friday a bit lower, but you've got your defined support of the 200-day moving average. So, if you want to be real cute with this, you can maybe wait and see if it hits the 200-day moving average. If not, you could try along here and hope that it remains above the 200-day moving average. But that was a nice January call buyer that we saw. So the option review that I mentioned this in the beginning of the video, but what I try to concentrate on is repetitive activity as well as longer dated trades like the January FCX play. I'm not really looking for the weekly things. Certainly, the I like to call them the pumpers and dumpers, which are the weekly options, where you see a little bit of momentum and just for maybe a day trade. These I'm looking for longer swing trades and longer dated activity. We saw repeat activity in Teradyne. We saw a Yandex call buyer. Russia has been pretty weak. But we could look at this. We could look at this particular name. This name's started to move up after we saw that call activity. Notice it's just kind of trickled in here a little bit below the 20-period exponential moving average, which is the blue line, and has been moving back up here. So Russia RSX, so like I mentioned in the ETF fund flow section, a little bit weak last week, but if you want to take advantage of the weakness in the whole group and the call buying, YNDX looks attractive to me. Next on the list, we already talked about XBI. There was a nice CX buyer, so I'm not going to go over each one of these. Where I saw that there was repetitive option activity was in Aclaro. This was a name that we hit very nicely last week. I can never type this one on the first try correctly, as I always want to type Oracle. But this was a name that we've been seeing a lot of aggressive call activity in this move up. It got a little bit ahead of itself, and we kind of caught the dip last week. Where did the dip buyers return in this, or where did the call buyers return? They returned on the dip last week, and this was bought early in the week, and then we saw on Friday a nice 8% move. So we caught that beautifully. I own this name in both stock because of the price of the stock is only $9.60, and also in options. So in options was able to hit two targets almost. The second one was almost for a double. So I'm still long this name, and I'm looking to play this name to about 1060, which is the top of value. But you're going to see this name come up on my list a couple times. Also HPE, this is a name that really got smacked on earnings, but they've been buying calls almost every day since they had earnings. So we'll look at this one. It's the same case with Western Digital in terms of call activity. They didn't report earnings, but almost. So here's the gap down in HPE in Hewlett Packard Enterprise, and since then, like I said, we've seen call buying taking advantage of this dip almost every day. Western Digital, which is going to come up on my list a lot last week, call buying all last week. Watch for an MACD crossover. Hasn't happened yet, but maybe watch that in the beginning of next week. Also watch 7907. But just about every day last week, there was a Western WDC call buyer. Also, Kramer mentioned this on his shows and tweeted out that he likes this name as well. TXT, another trade. This is also one that's a Tribeca Trade Group trade. We also took this trade, TXT June 50 calls. This is more of a defense and aerospace name. So I was able to hit two targets on this right off the bat on Wednesday. I'm still holding the final piece of this one as it digests more. If it happens to come in a little bit more, I may decide to add to it or get rid of it altogether. APO, We also saw a call buyer in, which I think is listed further up, Blackstone as well. So another Blackstone call buyer, BX. Here's Western Digital on here again. Here's Oclaro on here. Salesforce. I have to check the open interest on Monday to see if this trade that hit on Friday increased the open interest, but we've been seeing a lot of activity in Salesforce. Again, another post earnings. It's always interesting to me after, a couple days after a name reports earnings, whether or not buyers are going to step into the name. And they just reported last week, and there was a couple call buyers last week in the name last week. So that's a name I do not have a position in right now. I'm going to check open interest to confirm that these April 90s that I believe were bought on Friday increased open interest. Again, HPE and Western Digital on the list here. So a little bit of a shorter recap of last week's option activity. I just wanted to show you BX as well on here, but looks like I can't find it. But there was another call buyer in Blackstone as well. Blackstone, we saw call buyers a few months back, and it's been pretty quiet in this name, but we saw a nice January 2019 call buyer in the beginning of the week last week in Blackstone. So that's this week's macro video as well as single name option flow recap of the week. Thank you for watching the video. You can become a member of Tribeca Trade Group, where you get our trade of the day posts. You also get, which we detailed ESV on Friday. You also get to be a member of our live trading room, as well as our live group chat, as well as our newsletter. So we put out a lot of services. We do have a half off special right now. So if you go to Tribeca Trade Group right now and put in coupon code TTG, you can get half off the first month of our services. Give us a look. If you haven't tried us before, the amount of services that we put out I don't know anybody that puts out the same type of content as we do, as well as trading signals during the day live. So check us out, tribecatradegroup.com, and get involved with half off the first month. Thank you for watching the video, and enjoy the rest of your weekend. Thanks.